Alrighty guys, what is going up? Welcome back to another episode. In today's video, I really want to talk about why I am buying more NIO stock. So I hope you guys enjoy it. If you get anything of value, hit that like button and subscribe. If you guys have any questions or concerns, go ahead and ask them down in the comments. And if you guys want to learn more about investing in the stock market, go ahead and check out my course, and you guys can use promo code DIVIDENDS to get 50% off. So at least check it out. And if you guys want to go ahead and check out my merch, we have anything from t-shirts, hoodies, and even fanny packs. I'll put a link to that down below so you guys can check it out. So NIO, here we come. Roll that intro. Let's go. Bam. Now, for those of you that don't know what NIO is an electric car manufacturer based out of China. The company's growing at a very, very rapid rate, and with that, the stock is going parabolic. You know, the stock a couple years ago was trading for about $2 to $3 a share, and now it hit highs at over $64 per share. So the company's growing at a very, very rapid rate, and a lot of people and a lot of analysts are stating that this is like the Tesla of overseas, and I definitely see that because the cars are phenomenal. They have like an Alexa in the car. They are working on autonomous driving. The company's really, really cool. But how does the financials look? Now, on their last earnings, they did announce a 159% increase in revenue, which is phenomenal because as investors, we hope that this momentum is going to continue for 2021. I really believe it will. Now, one of the things that is a little bit concerning about NIO is their gross profit went down over 300%. Now, this company is not profitable yet, and it's very, very common to see companies not profitable, especially startups and smaller companies, because as investors, we hope one day that this company will eventually become profitable. For Tesla, it took like 12 years for them to become profitable, and now look at them. So I do think that it's just a matter of time before we see this company profitable. Now, for me, one of the most important things for evaluating a company is how much cash they have on hand, because if let's say the company slows down or something happens, you want to make sure that there's enough cash on hand to continue to grow the business and continue to hit their customer marks. And NIO definitely has quite a bit of cash, over $3 billion in cash, and this is over 1,000% increase. I do think that's very, very strong, and this is a great thing for the company. Now, another important thing when evaluating a company is you want to make sure that the company doesn't have a lot of long-term debt, because if a company has billions of dollars in long-term debt and not enough cash, that's terrible. You always want to make sure a company has more cash on hand than long-term debt. And NIO does have that. So NIO does have $3 billion in cash, and they only have roughly about $1 billion in long-term debt. And it's very, very common to see companies take on long-term debt to grow the business. It's very, very common. Now, another thing that is a little bit concerning about NIO is their margin. Their margin rate is negative 55%. So what that means, for every $100 NIO brings in, they actually lose $55. And obviously, for a company that's growing, a growth stock, a growth company, that's very, very common to see that. You want to make sure that this company is still hitting their revenue marks, increasing their margin, because that's very, very important. And if you have those really two things, the company's going to grow, and it's going to be a matter of time before the company's profitable. Not to mention, the deliveries are doubling pretty much every quarter, so I do think that's a phenomenal thing, a phenomenal growth, and I obviously believe this company is pretty much the Tesla of overseas. So now that we have a good understanding of the fundamentals, now let's look at the technicals, support, resistance, and where I see it in the future. Let's go. Alrighty guys, so we have NIO, this is NIO here. You guys can see that this stock really wasn't moving a whole lot, trading anywhere from about $6 to about $9. It did have that support and resistance. Hit lows here at around $1.20, and then ever since then, it pretty much exploded, hitting highs at $66 before selling off to about $56. So evaluating this company here, you guys can see that this stock has had a very, very strong resistance here at around $54 a share. You guys can see it hit it, and we did get that major sell-off. Now, it did find some support here at around 43. Then the stock went from about 43 all the way up, breaking out of that resistance to 66. So now, with the stock curling back down like it is right now, I believe it's going to use this old resistance as new support, because stocks have a tendency to do that, and I do think NIO will fall in line with that. And I do think a fantastic strategy is dollar cost averaging, because this is a phenomenal stock for that, because you can use all of that volatility to your advantage. So obviously my price target for about 2021 is going to be around $75 to about $80 for mid to late 2021. I do think this company is growing at a very, very rapid rate. The cars are very, very cool, and I do think their deliveries are increasing, pretty much doubling every quarter. This is a phenomenal stock here. So I do think the stock is a buy, and I just think you got to make sure that this stock definitely does carry a little more risk than a traditional ETF or blue chip stock. So make sure you guys are diversified in those before you guys go heavily in this here. So that is it though. I hope you guys enjoyed the episode, and if you did, hit that like button and subscribe. If you guys have any questions or concerns, go ahead and ask them down in the comments. And if you guys want to learn more about investing in the stock market, go ahead and check out my course. And you guys can use promo code dividends to get 50% off. So at least check it out. So we'll see you guys later. Take care. Bam.